All right, thank you again. My name is Trieste Philbrook, and I am Events and Development Manager here at the Greater Concord Chamber of Commerce. I want to thank all of our presenters for their time and information today. Thank all of you who have registered for this information. I want to let you know that this webinar is being recorded, so you will have access to it as well as to the slides that are used in presentation afterwards, and I can provide those to you. I want to thank Ryan Hvizda of Hvizda Realty, Ryan Poirier of Thrive Accounting, and Mark Lester of Eastern Bank for sponsoring and presenting this webinar today. And I believe we are going to start our presentation with Ryan Hvizda.
Yes, thanks for having me. I'm gonna just quickly troubleshoot on making this screen happen. So give me 1 second and then I will get started. Share screen. Yes, good. I was worried that I wasn't going to see our little bouncing heads on the side as the panelists. So I'm Ryan Hvizda. I'm really excited to be here today to kind of go through. On my end, I'm going to talk more about the philosophy of being a resilient business owner that then's going to tie into Ryan going into like the nuts and bolts, and then Mark how to fund your business, especially during tough times. So I thought that this graphic of a plant growing and nourishing into a tree is a really good visualization of what we do as business owners. We start with a baby little seed and we give it a lot of love, and then it becomes a fruit-bearing tree that, you know, becomes into all sorts of other products and supports many. Recently, I read this book called A CEO Only Does Three Things, which is finding your focus in the C-suite by Trey Taylor, and I highly recommend it. And I thought that this quote was a really good way to start off today. So for every company in every industry, 3 areas are critical: your people, your culture, and your numbers. Each is connected to the others. Taken together, they act as the foundation upon which your company will build and maintain its success. And so through my part of the presentation, I'm going to talk a bit about culture, a bit about people, and then about numbers and how they all relate and how we want to hold everybody accountable to, you know, thriving in all 3 in order to become resilient. I'm realizing I don't have, if somebody has a question, could you just let me know there's a question, because the way my screen's set up, I don't see a notification about questions.
Sure, I'll keep an eye on that for you.
Cool, thank you. All right, so culture eats strategy for breakfast. Another great quote. So whether you know you have culture or not, like it's there. So I like to think about this as if there's a lot, just like a city lot, and you're tending to it and you're planting a garden and you've got diversity in the flowers and the food and there's intention and something's growing, that's culture. Or you've let it go and weeds and it's overgrown and just whatever's happening is happening, that's also culture. So if you're not paying attention to the culture in your organization, you know, you could end up with just an overgrown lot, or you can end up with an intentional garden that's producing. I have a farming background where I didn't run a resilient business, so I do reference agriculture and trees and that as a metaphor just because of my past experience. So one of the first questions I always ask, and I do this often in my business. So my business, I run a real estate business. There's now 8 agents. We have a 5-person ops team, and we do about 160 units a year right now, which is coming out to be between, if all goes well, about 60 million this year. So it's really important to us that we have shared values, because we're serving a lot of people making the biggest decision of their lives with one of the biggest assets. So for us, values is really important. And I'm also the president of In Town Concord, where we're in the next week going to be going over values. So I think that this is really important, that whatever your organization is as a values, everybody that's out there representing that organization has a shared value system. So one thing to remember is, like, a lot of organizations put values on their website, but it doesn't mean that everybody is sharing those values. And I have this way that I see the world, which is like, if I say the color blue, Mark might think about a plane in the sky, and I might think about the boat in the ocean. And we might be having a conversation about the color blue, but then we walk away and he's building the plane and I'm tending to the boat in the ocean. We don't actually have a shared agreement about what value that word means. So that comes with values too. So you can say, I agree in transparency. That's our value. But what does that mean for the top of the organization and the bottom of the organization? Like, are you in alignment about what that word means and how you embody it? So I think that's a really important thing as you grow your business, you run your business, you check in about values, and everybody understands what that value means, so that when they're making decisions, when they're representing your company, they're out there in line with the values. Slide. So this is a really good way of a value check. I think if you have the opportunity to screenshot this or pause in the re-recording, but taking these questions and from a business owner perspective, asking yourself, you know, from a 30,000-foot view, all of these questions, and then taking these questions and have your employees answer these questions too. Because then when you see your answer or the leadership's answer and the people that work for you's answers, that's where you're going to actually see what the values of your company is. I'm not going to go through and read every single one, but I mean, I think these are really great questions to ask yourself about your business and have others in your business ask about them too. I do see a chat. Oh, Q&A. Thank you. All right. So another quote from my favorite book. A company equals people times culture times focus. So to increase the value of the company, we must increase each of those three parts. So people matter more than any other variable, and there's no area where a CEO's impact will be more directly and widely felt. So as we move towards a time where we're receding in the economy and there's a lot of fear, and the first thing that I know a lot of companies do is they cut people, where there's a huge opportunity to really amplify that social equity and that intellectual equity that you've already poured time into, and get them on board around culture and numbers. Because if they could then start making decisions like, if we do this better, we'll save this amount of money, or we do this, we'll be able to maximize that sales metric, versus feeling like every day they're showing up and their job is on the line, you're affecting your culture. And then therefore it's actually going to be more expensive down the line to get a great talent fit back, because you're going to be known as a company that cuts people when times are tough. I spoke a little ahead here, but I think we have this saying that we slow to hire, quick to fire. So it's really important that when you bring people in, you take the time to hire them correctly and then train them. And then once they're up and running, it's very expensive to replace them. So I think it's just putting in on that point that you should be protecting the people that you have and getting them on board with you for how to make your business more profitable. The next, getting towards the end of my presentation here, the numbers are really, really important, because math is the language of the business. This is why I'm in alignment with Ryan here. He helps me on a monthly basis, know all my numbers. But one of the big decision-making things that you need to have as a business owner is to be able to have enough cash to grow your business forward. I don't know the sizes of businesses that are here today, but I know a lot of self-employed people that will pay themselves first, or they're just kind of always taking money from different places to fund maybe themselves, or they're not saving for the future. But I think it's really important to have that look of this is a business. I have people in my lives who I'm supporting their families. I'm supporting their lives and their dreams. What am I doing as a business owner to make sure that I have the money that I need to support them and grow the organization forward? Finding out what your KPIs are. So what's your key performance indicators? What are the numbers that you need to know in order to really stomp on the lever of growth in your business? So for us in real estate, and I'll speak to that, but I've also put a bunch of other ones up here. In real estate for us, it's these leading indicators, which are the things that we know if we do today will lead to income in the future. So we track conversations. How many conversations did you have today? How many appointments did you set this week? How many signed contracts did you set this week? And how many did you put under contract? And how many did you close? So we track all of those things because we know if all of a sudden somebody hasn't had an appointment in 4 weeks and they're having all these conversations, it's easy for us to say, hey, what are you actually saying in those conversations? Because if you're having a ton of conversations, but you're not setting appointments, maybe there's something we can do with your skill level in the conversations to say the right things to help people get towards wanting to set an appointment with you. So that's just, I can speak to the real estate, but there's other KPIs that you could be paying attention to and should be paying attention to on a daily, weekly, monthly, yearly basis. I'm going to speak again to real estate because I know these numbers the best. We have the leading indicators and the lagging indicators. So for us, I know that in order to focus on the business of tomorrow, I need to be paying attention to conversations, met appointments, and going under contracts. Closings are already in the past. Like that's a lagging indicator. I can't control that. It's already done, but I can control the conversations and the appointments. So I know if I, as a person just doing my own business, I know that if I set an appointment today, I know my conversion rate of how many appointments I need to get to an under contract, I can control that. So I think figuring out in your industry and your business, what are your leading indicators and what are your lagging indicators, and then paying attention to them and getting all your people involved with those as well. Because again, when times are tough, you want to make sure you're focusing on the activities that are actually dollar generating and are growing your business. More tracking is financial measurements, people measurements, sales and marketing measurements, R&D measurements. So our admin team, they're measured on how many referrals they get. So they ask for referrals for our team. They're not salespeople, but they serve our clients. So they have referral goals. It's not just financial. Same with how many social media posts do we have? How many flyers are going out and what's the ROI on those flyers? Like there's so many things to track here. So then you can start to make better decisions and you can start to figure out what's working, what's not, stop what's working, stop what's not working, and continue or add more money to what is. Ryan also knows this about me. I'm very much a red light, green light type of business owner. I don't like to spend money just to be like on an idea and like, let's hope it works. I want to like really prove that whatever I'm spending money has at least a 4 times ROI. That's in my business, that's the standard. But I think if you're going to spend money, you should track it over 3 to 6 months to see what that ROI is before you just keep throwing money at it. And then while you're starting, I think keeping your expenses below what you're making is really going to help you lead to building your reserves. Which actually, I don't know why. A little bit out of order, but I'll talk about reserves at the end. So in the market, when the market shifts, it's super important to go through what you've spent already. We do an exercise where we go through our P&L and we question and challenge everything like, hey, is this working? Is there a cheaper way to do this? And you can start to see like, oh my gosh, I had this subscription. I think it's a good exercise to do personally as well, because if you're running a business and you haven't cut your personal lifestyle expenses and you're expecting your business to fund that, then you're kind of doing a disservice to the people that are within your organization. So I think this time of evaluating resources and services is good to do on a personal level and a business level. The next thing that I think is super important is like getting the people that work with you and for you to feel like they're owners of the company. I think this goes back to the values. When everybody has a shared value system and they feel like they're part of the mission of the business, they know that they're making impact in whatever industry it is, then they start to make decisions that drive your business forward versus just showing up to work to get a paycheck. Then you want to reward those people as well. Then lastly, before Ryan will break down cash reserves a little bit more, I would say a really good rule of thumb, especially moving into tough times, is at least 6 months of operating expenses. I personally take this money and give it to my financial advisor to put in a business investment account that's like, I can't touch it. It's just growing. Right now, it's not really growing because of the market, but it's I can't touch it, so that it is really there. And my paid employees know it's there. They know that they're not going to be, we have 2 months in a row of slow sales. They're not going to worry that their job's at risk. They're actually more tied in to keep building the profit, because they don't want to see our business have down months, but they also know that we're not just going to go on a mass firing spree because we don't have enough money to pay them. Then the next thing is like, when we are not looking at tough times, like how can you use that extra cash to build your business? And then in New Hampshire, we have business profit tax. Can you use your, like, I strategically use my business profit taxes this year to do the CDFA. Sorry, I'm totally blanking on the program, tax credit, right? I think that's what it's called. So basically was able to donate $20,000 to a nonprofit organization, and then $15,000 of my business profit taxes is now going towards paying down my taxes and not to the government. I think it's a really cool program, but when you start to have cash reserves, you can be more strategic versus paying your taxes in April, or where I think that's personal. Whenever the March, it's March. When your business taxes are due in March, it's better to be more like strategic with it than it is to pay in the rears. And then before you hire, the last thing that I'm going to leave on is have 6 months of that person's salary saved. So you're never prematurely, like you're not feeling, you never have the pressure to keep that person or that you got to let them go. They can earn their right into that role, but you'll feel more confident if you have at least 6 months of their salary to do that. I'm going to hand the baton. Oh, is there questions or anything before I hand off the baton to Ryan P?
Not seeing any yet, but as a reminder to, Ryan is doing his screen share and getting everything going. There's a Q&A function on the bottom for the attendees. At any time, you can type in a question that'll be visible for our panelists, and we'll also leave time at the end for dedicated Q&A as well.
Well, I guess we'll get going. My name is Ryan Poirier. I'm a CPA with Thrive Accounting. I have 10 years of experience, 5 with New Hampshire Department of Revenue, and I eat numbers for breakfast. So I'll try to keep the numbers to the minimum here because I know not all of you do. So the significance of cash flow. A pre-COVID study of QuickBooks found that 61% of small businesses struggle with cash flow. 32% of those are unable to pay vendors, and 82% of those small businesses fail because of cash flow. Now, it may be complicated, or you may think that cash flow is a bit of a bear to handle, but there's 3 major steps that we need to look at: preparation, operational, and emergency. And I broke it down to 12 subsections, and don't be afraid, there's not a quiz on this afterwards. It's just trying to put it in order. With preparation, when you need money, it's hard to, when you don't need money, it's easy to find. When you do, it's nowhere to be found. The emergency fund, as Ryan talked about, we want to see like a 3 to 6 months. Ryan likes to be at the end of the 6-month spectrum, but 3 months at least gives you an ability to be more strategic with your line of thought rather than a reactionary to what's going on. Additionally, a line of credit can bridge gaps in the cash flow cycle. You can take advantage of new opportunities like buying assets or finding ways to make more cash flow come in. And you can buy new equipment, which can make things easier, more efficient, and maybe less labor intensive. The final thing you can do in the preparation is analyze whether you want to lease or buy an item. If there's a lot of uncertainty, maybe you don't invest in the hard assets like land or the building, and maybe you lease it for a while. Or maybe if there's a piece of machinery that might go out of a technologically advanced position, you might lease it until the next one comes up. For operational, the first thing is to pay bills strategically. I always think of, there's an old Roseanne episode where her and her husband are trying to figure out which bills to pay with some money they got in. And she says that she always just throws them up in the air, and whichever lands face up, that's the bill she pays. And the other ones are for the next paycheck. Now, I don't recommend that. Instead, maybe wait until the last possible day to pay the bill in order to keep the cash on hand as long as possible. With that, there's an opportunity to negotiate with your vendors, to turn vendors into lenders. Sometimes the actual terms of the vendors are more important than the price that you're getting from them. If you can get a net 90, that might be worth the extra couple dollars that they're charging you instead of the net 30 that you normally get. The third is to handle receivables. You want to get your money in as fast as possible. You want to clear out invoices, shift money from monthly to instant invoicing, offer multiple payment methods. A lot of businesses are fearing the 3% credit card fee. That's just something you need to bake into the price and stop fearing it. Having that money in your bank account immediately instead of waiting for a check to come in the mail or chasing somebody down is worth double that 3% credit card fee. Offering early pay discounts is important. Taking upfront payments and speeding up your collection systems are all ways that you can make money come in quicker. The other items you can do in the operational phase is to reevaluate the cost structure. Are you offering items that cost too much money? Are those KPIs, as Ryan talked about, for that service that you're offering not worth the amount of money that it's bringing in? With the payroll cycle, you want to align it with the revenue stream. So if you can do bonuses when a house is closed, if you can do things that make it match when money comes in, money is going out, that'll make things a lot easier. You should think about a business credit card. It's basically a 30-day loan. So you make all of your small purchases and then pay in one lump sum at the end. And that allows not only for you to better control the cash flow and have it in your bank a lot longer, but also just to simplify things. So you can see that you spent $3,821 on, miscellaneous expenses last month and not have to track down exactly, where things went and why. It makes it a lot easier to have that one big number. And finally, use technology for payments in and out. There's a lot of great fintech is what they're calling it, financial technology out there to make things easier to pay on that last day or to get money in the door quicker or to, send a proposal in an instant. There's a lot of technology that can be used to make your job a lot easier. What can you do in an emergency situation? So say that operational preparation didn't happen for whatever reason, and you're up against it in a tough spot. First thing you could do is liquidate assets. It's better to step back than to collapse. If you have those items that you can sell and then lease back a substitute, that makes sense. Or if you just need to, downsize and restructure what you're doing. Be upfront and honest with everyone involved, all of the stakeholders, debtors, employees, vendors. It's important to let them know instead of having them guess as to what's happening or why they aren't getting paid. More often than not, we're just people too. Everyone across the desk from you is somebody who has, to take money home and to pay bills and, has a mortgage and understands when things go, the wrong way. Finally, offer heavy discounts. Dropping the price to increase volume temporarily, it could save you. It could provide you a way out of a tough situation and allow you to be able to continue on and to raise those prices again when things turn around. So finally, some things to think about is to stop bank balance accounting. Sometimes that's called the residual method, where at the end of the month, whatever's left in the bank account is what's allowed to be used. And that's just not the way to do things. It's worth having as many eyes on your numbers as possible. If you don't outsource to a bookkeeper or an accountant to manage or to help manage your KPIs, and employees who have a vested interest in enterprise success is important. And Ryan touched on that a lot in making your employees part of the ownership team. And that's a lot of transparency and showing them the profit and loss and the KPIs and how things are doing. And the last item is to take preparation steps today means that the desperation moves will be less likely. So having an ability to step back, to talk to somebody, to hit up your accountant or your banker about how things are moving or ideas they may have about increasing cash flow is an important step. Stop sharing the share. And Mark's going to go over some programs and what banks are looking for when you're looking for cash flow assistance and help. And there you go, Mark.
Thank you very much, Ryan. And as I get my setup here. All right. So again, my name is Mark Lester. I am with Eastern Bank, and I know there are some other bankers on this webinar. But really, what banks are looking for in financing your business, right? There are 5 things that commercial lenders and banks are looking for, and they're going to be character, capacity, your capital, the collateral, and the conditions of that particular collateral. So a bank must believe in the character of the entrepreneur, the business owner. A borrower's reputation for fair and ethical practices, including business experience dealing with other businesses, and their reputation within the community. We also look at capacity, and that's the ability of a business to pay a loan in view of its income and the obligations. Those things are very important to how you can pay that back. That's why, as Ryan had said before, numbers matter, right, in financing a business and what you have. Also, we place a strong emphasis on whether the business has financial stable capital, which is the net worth of a business, the amount by which its assets exceed its liabilities. And then also the collateral is important. Security in the form of assets that a company pledges to a lender are going to be critical to that. And then the conditions, right? The circumstances of the loan, the requests, including potential for growth, amount of competition, location, form of ownership, and insurance. All these things matter. Every bank is going to look at these things maybe a little bit differently, but these 5 areas are critical when banks are looking to lend to a business owner. And again, the better the relationship that the business owner has with a particular bank, the more deposits they have with them, more business they do with them, and they can have a better understanding of the whole story. And sometimes it's important to have relationships with multiple banks because certain banks have certain appetites, right? So sometimes it can be beneficial to have a couple of relationships with different banks. And what banks are looking to, what we require on the most part, the 3-year business tax return to see. They want to see the history of the business, how well how is it tracking? Is it tracking up? Is it tracking down? We also want to begin to look at your personal tax returns as well. There's usually going to be an application with a personal financial statement in there. And then we need the profit and loss. That's year-to-date numbers. That's why it's so good to have some type of Excel spreadsheet or working with QuickBooks or working with a CPA or an accountant to help keep those things organized. And you can pretty much press a button and come up with that year-to-date profit and loss, a year-to-date balance sheet, as well as your accounts receivable. Beauty of the accounts receivable is most banks, I know Eastern Bank does, will do anything that's 90 days or sooner, right? So anything that's 30 days, 60 days, or 90 days out, we can lend up, we take the full value of that and we'll lend up to 80% of your accounts receivable. If you have anything older than that, then our bank and a lot of banks will subtract anything that's older than 91 days, subtract that from the total. Just because it's, unless it's a particular contract and things like that, like a government contract, sometimes they'll utilize that in a different format as well. And the key to also getting lending is, and I know Ryan had talked about this earlier, with when things are going well and you don't feel like you need to get bank money, or that's the best time to begin to apply for a line of credit, especially because when you don't need the money, it's nice to have that in place just in case, because the time that you need the money, things may be in such a bad shape where it's going to be more difficult for a bank to want to lend to you. And then we also do what we call a debt service coverage, right? We're looking at 1.25%. So you have your net operating income, which we're going to also, which is your revenue, and then we subtract any your certain operating expenses, and then we divide that by your total debt service, your current obligations at that time. And they're looking for a 1.25%. Some banks have a little bit higher threshold. Some banks have a little bit lower threshold, but that's typically what banks are going to be looking for, is that type of debt service coverage for you. A lot of banks will use the SBA, which is the Small Business Administration, which is a great way to help lend, and it helps take away some of the risk to the actual bank. And so Eastern Bank has been last 13 years have been the #1 SBA lender in Massachusetts, and like in the, I think, last 12 years we've been the #1 SBA lender within New England. So again, so that's pretty much what a bank is going to be looking for. And again, and a good banker, right? And a lot of times, if I know myself personally, when I can't help a customer because of certain numbers are just not there, I try to find another option, and I work with other banks. And so, like I said, some banks have different appetites. So I have good relationships with other bankers and other institutions, and we try to share information sometimes and see if their appetite is, they have a better appetite for this type of product. And what I try to do is find a way to help that small business owner find a way to get that needed cash to help keep their business afloat and to grow. And I think that's all I have there. Escape. I'll stop sharing my screen. So any questions? How do I stop? Oh, here we go. I'll stop sharing. Very good. So sorry about that. So do we have any questions at all for myself or for Ryan, Ray?
So if anyone does have questions, just at the bottom of the screen, you'll see a Q&A. Just click on that and you can type in questions that will be visible for all of our panelists. So we have plenty of time to address those questions. I'll ask a question while we're waiting, since I have you all. Time frame, and I don't know who's best, or maybe you each have your own thought process on this. So time frame maybe for someone who is really new in business, or even just considering starting a business and looking into all of this. You know, what would you say time frame wise of kind of getting finances in order, maybe employment, like you've talked about, Ryan, with, you know, creating that culture when you're first kind of starting out? What would you suggest for time frame on that?
Time frame in terms of like track, like in terms of what is the outcome, like when you should start with?
Yes. Yeah. Like if you're just thinking about getting going, like I'm going to be like, okay, I'm going to have all this ready in 2 months, or are you planning this a year out for a new business?
I think one of the first things I would say is like, make sure you have a partnership with a bookkeeper, because right off the bat, if you don't, then you're going to lose that ability to track and make decisions based in numbers and what's happened. With accounting is when you account for the past, then you can be accountable to making a choice today, whether I'm going to choose to be better or I'm going to choose to be worse. There's no staying the same. Like if you don't choose to do something better about your numbers, the numbers are just not magically going to get better. So I think just from day one, have an understanding of the numbers or who you need to bring into your world to help you with numbers. And then there's this whole idea of like every dollar that comes in, you break it up into buckets. I would suggest trying to do that right off the bat, like pay profit first, put your tax like 50 cents, or I don't even know, maybe Ryan P can tell me like the breakdown of the numbers of like how I would take $1 and break it up. But like there's the profit bucket, there's the tax bucket, I would say there's the reserves bucket, and then there's the operating bucket, and it's all going into the income bucket and then breaking out into those other buckets. Do that from the beginning, because it's way easier to build a habit from zero than it is to create good habits when you're already got a mess behind you.
Yeah, and the cool thing about doing that in buckets is that tax bucket doesn't always have to go to the government, right? If we have a good, reserve in there, maybe there's a way to fund your retirement, or to fund, a charitable contribution, or a way to save money on taxes that doesn't, affect you as much. So having the ability and the cash flow available to do things gives you a lot more choices.
I would say it's important too to make sure that you have a quality CPA, a bookkeeper, accountant. I just had a conversation with a business owner who was trying to get some lending, and as we were doing our due diligence, we found that there was a New Hampshire tax lien on his business, and come to find out, his previous CPA bookkeeper did not pay his New Hampshire business profit tax for 2017, 18, 19, and 20, and so he has this $47,000 penalty that he has to pay. They waived the penalty fees, but he's now over the next 2 years paying $2,500 a month to bring that back to positive. And as a result, it's impacted his ability to get additional lending at the moment. So if granted, he now has changed his CPA, but if you can get that done for you beforehand and make sure that it's being done properly, you can avoid these kind of hassles. Mm-hmm. And typically banks they'll lend, typically they want to see a business established for at least 2 years. Eastern Bank a lot of times will lend to a business if you have to at least been in business for 1 year for us to begin lending. But we do lend startups as well. Not all banks have an appetite for startups, but there's a lot of work involved in doing a startup. But get started early. As you know, you want to begin to start that relationship. I just was working with a young lady that was trying to do a buy out of business, and we were able to. So I set her up with my business partner. We were able to get her work set up with SCORE, and then begin to work through that process and coming up with a resume and all that kind of stuff to make sure that you get yourself in place. And sometimes you can fund it on your own because you get investors, and sometimes you need to get some lending from a bank, and some banks have an appetite to help out a new business.
Mhm. Some good questions in the
Yeah,
Q&A.
we do have a few questions. I'm not sure if one of you in particular wants to address the first one. I'll read it because I'm not sure that the participants can't see it, just the panelists can. So it says, what would you caution businesses on during these unsettled times in the market, and should they be more conservative?
So there's two lines of thought here. One is to be more conservative because cash may be of precious value. The other line of thought is that now is the time to strike. If you've done the operation, the preparation, the operational, there's good deals to be had out there. The assets that might make you cash flow in the future might be discounted right now because others haven't been prepared. So being able to step forward and have that 3 to 6 month, savings, you may be able to use that to make the future even better.
Mm-hmm. I concur. I think personally and professionally, you should be monitoring what's being spent, cut what's not held to an ROI, and then double down on the things that you know generate business.
I would concur. I don't think I need to add any more to that. It's good.
Excellent. Next question is a great one specifically for Ryan H. It says, how are you protecting your business from fraud, and what might keep you up at night?
So one thing that we do in terms, there's fraud in many different ways, right? Like, I think in terms of security, because I think there's fraud where there's like people that do mean like terrible things to women and men, like meeting a stranger at a house for the first time. Like, we will only show a buyer a house once we meet them in a public place or they come to the office. Like, we don't just show strangers houses, which then means we're not putting strangers into other people's homes and their biggest asset. So it's like right off the bat, like, you don't get into a relationship with a stranger until you can vet them. And working with our allied partners, we all are very cognizant of wire fraud. We bring it up often because that is something that pirates the real estate industry, where like spam or these hackers get into your email, they follow a transaction all along, and then they shoot wire instructions in right before the transfer, and funds go missing because they go off to some other country. So we're all, as an organization, I think now with realtors across the board, we're always talking about wire fraud and always cautioning who is actually going to be sending the wire instructions. It's never going to be through email, and it's never going to be from someone you don't know. So that's another way. And then we have everything on QuickBooks, double like when it comes to cybersecurity, like the two thing verification. I think that's the fraud. In terms of what keeps me up at night, a couple things. I care so much about the success of the people within my organization. So like when somebody's struggling or they're not achieving what they said they want to achieve for themselves, like that really like will wake me up at 3 a.m. And then also just having the endurance right now to do the work that's going to need to be done to find the motivated. Like in our world, we're going from a very bountiful time where people were choosing to move, wanting to move. And for a period of time, I think we're going to be in a need to move situation because people are scared. National news media is really hammering down that, something negative is going to happen in the housing market, but people are always buying and selling. We have life circumstances. So it's just a different type of work that needs to be done that hasn't had to be done in a while.
One thing I'd like to add to that is that Ryan has such a great view of her books that when we have a discussion about it, she knows when something looks off. And I think that's important. One way that you can do that is by limiting the amount of accounts that you have, not only cash accounts, but also like in your QuickBooks. I often see these trees that have, 3,000 accounts in them because they want to put every little piece into every little spot. And that just makes it hard to know what normal looks like. You put all your Walmart purchases in one little, sub account under cost of goods sold, then it's hard to see if you shopped at Target that month, if it's different. So making your chart of accounts simple is one way to kind of alleviate fraud and to know, when an account looks weird.
Mm-hmm.
And to go to Ryan's point too, when it comes to wire fraud, right? That's why when you're doing a wire with your bank and they're asking you a lot of questions that seem to be very intrusive, they're doing that for your benefit. They want to make sure that, how did you receive this wire information? Have you talked with them? Are you familiar with them? Do you understand? Because once that wire leaves the bank, it's almost virtually impossible to get it back. And so they're doing that for your benefit, and then making sure you have good partners, right? Whatever business you're in, and utilizing those partners to help you mitigate that fraud, that potential fraud, because it's definitely on the uptick right now. We're seeing a lot of that right now in banking for sure.
Excellent. Great. Well, as I mentioned, this recording will be available, and I'll put together the slides from all the presenters as well in a PDF and send those along to all of you that are on today. And then if the presenters want to include with that to me any contact information. So if anyone wants to follow up with you with specific questions about today or any future business or questions, we'd be happy to have you do that as well. So again, I want to thank Thrive Accounting and Eastern Bank and Hvizda Realty for sponsoring and taking the time to present for all of you today, and thank all of you at home for setting aside the time in your day to join us for this information.
Thank you for having us.
Yeah, thank you.
Everyone has a great day.